All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. So Apple had a run, obviously, till the day they launched their phone and stated everything at that meeting. And then it hit 126, and from that point forward, it has fallen. It's been in a sideways direction. Broke through support, but quickly after the bulls reappeared and brought this one back over the 50-day moving average, back into bullish territory. So right now, there's a lot of volatility going on, and the tug of war between the bulls and the bears is certain here. You can kind of see that, how quickly they're bringing it down, how quickly they're trying to bring it up, and one or the other is going to get exhausted sooner or later. So let's move our supports to their new locations, and then we're going to look at our new resistance level, and then we're going to look at this a little bit broader so that we can have other points of reference to look at for the remainder of the hours of the day, and also to keep in mind for the rest of this week. So looking at it broader, one of the highest points here was up here at 122, so that needs to be broken through so that the bulls can actually start to work their way up to newer highs and continue to hit newer resistance levels. And on the other hand, the lowest point reached here from the bearish trend before the bulls appeared is way down here at 118.36. I'd write that down. These are two numbers to keep in mind for tomorrow and also the rest of the week coming ahead. So those are the numbers to keep in mind and pay close attention to. Now, our resistance level is 121.20, and the bulls are going to want to break through that and turn that into a support so they can break away from the 50-day moving average in an upward direction and confirm bullish territory. Right now, this tug of war can change in any second that the bears appear and tear this one down, or the bulls try to bring it back up and just keep bouncing sideways or up and down with volatility. So the bulls, to confirm that they can start to pull away from the 50-day moving average, which is 120.57. See if I can land on it exactly. And there you go. 120.57. Oh man, it keeps jumping around. There we go. 120.57. I'd write that down so that you guys know on what side of the chart we're in, because when we're above it, we're in bullish territory, and when we're below it, we're in bearish territory. So for the bulls to pull away from it, and they have to do this to continue this momentum and work their way up to newer highs, they need to break through 121.20, turn that into a support, and start to hit newer highs and newer resistance levels. Now, on the other hand, we have what the bears want. And the bears want to cross the 50-day moving average. That's the first point that lets us know that the bears are gaining leverage by crossing the 50-day moving average and getting into bearish territory. Once they've accomplished that, their goal is to break through support. So if the bears accomplish breaking through support, they accomplish getting back into bearish territory by crossing the 50-day moving average, and they're on their way to break through the first support level in bearish territory, confirming that they're gaining control. And this support level is 119.38. I want every investor to keep that in mind and pay very close attention to how this stock is reacting. If it breaks through 119.38, how quickly is it moving to newer lows? How quickly is it moving sideways? Are the bulls even trying to reappear and bring this one back up? Those are the things to pay close attention to. But before even waiting for 119.38, I'd pay close attention to how quickly this broke through the 50-day moving average, and are the bulls trying to reappear quickly before this continues to hit newer lows and move further away from the 50-day moving average in a downward direction. Now, that tug of war, like I said, is going to be very important and interesting, and pay very close attention to it. Now, if you're willing to wait till support, this is where I want to emphasize to all investors that 119.38 is super important, because if that gets broken through, this could start to test newer lows, and it's already confirming deeper and being deeper into bearish territory. Why? Because it's already further away from the 50-day moving average as it's going down. It's already been in bearish territory, and confirming to break through this support is just more confirmation for the bulls to know that they're losing leverage and that the bears are gaining control. So pay close attention to the behavior. I know that the bulls can try to reappear down here and bring it back up, but the bulls have to come in hefty and strong like they did today and break through the 50-day moving average to gain any sense of control. That is why the bulls tomorrow have to break through 121.20 and turn that into a support to continue the momentum. If not, they can lose it and all this effort can go away and the bears can start to gain control and work their way towards breaking through 119.38. And like I said, if the bulls reappear down here, that's good that they bring it up and they can probably stop it from hitting newer lows. But they're not going to have control until they break through the 50-day moving average, which is 120.57, as I stated earlier. I hope that with these cues, you guys are well equipped and ready for tomorrow's trading day. And as always, if you found this video helpful and informative and you're a first-time viewer, please do so and subscribe. And don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And at the end of this video, there's going to be a pop-up video. I talk about the S&P 500 and I talk more detail about it in the video. But just to give you a summary, I talk about the S&P 500 and how it's rising several points on scheduled dates. On those scheduled dates, the charts are showing them for themselves and the Federal Reserve is pumping the markets. They move up with it, right? So the S&P 500 index completely is moving up with the Federal Reserve pumps due to the pumps. And within the S&P 500 index, there's individual ticker symbols rising up with it as well. What does that mean for us as investors? There's an opportunity to maximize profits and minimize losses because these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but it does add up per share. And like I always say, profits are profits. I go into more detail about it in the video. I'm not there to tell you to buy, sell, or hold. It's not a video to guarantee you profits. It's just a strategy that I want to share with all investors and viewers for as long as the Federal Reserve continues to pump the markets, an opportunity for all of us to make profits while the market's going up or even when it's going down. The charts show it for themselves. Check it out. And I'm going to be posting the next video soon, the updated one. It's a weekly series and I talk about it as they release it and when they release it. So check out the video. It should be popping up soon. At the end of this video, click on it. I hope you guys find that video helpful and informative as well. And thank you guys so much for watching. And let's make some money.